One of the challenges for traders is how to really visualize the pace of a particular move in the market. I found that the most accurate method for doing so is to transect a move instead of connecting the highs to the lows on a move. That way, it's easier to avoid a lot of the extreme ticks or tails within a move that can distort it. The charts shown here are two examples of how one might measure the pace on a 3-minute chart of the QQQQ. For those that are new to trading, the QQQQ is an investment trust designed to correspond to the NASDAQ 100 index. In the chart on the left, I've connected the lows to the highs on each of the upside moves. As a result, when you compare each of these moves to one another, they appear to be very similar in terms of the pace that is involved. In the chart on the right, however, I've transected each of these upside moves. While the difference is not that extreme in this case, it demonstrates how the upside move in number 2 is actually stronger than the move in number 1. Although number 1 and number 3 remain very similar in terms of the pace of each of these moves. This technique can be most helpful in a trading range. This is a chart here of the 5-minute NQ, which is the NASDAQ 100 E-mini futures contract. On the left, I've again shown the move by connecting the lows to the highs. This only shows the activity from 10:45 into 11:30 Eastern, however. It ignores the fact that the NQ actually continued in a longer trading range after 11:30 Eastern. By transecting the move, it becomes more apparent that the overall correction off the lows is really much more gradual than the drop off the early morning highs, hence allowing for a much stronger breakdown into 1300 or 1 o'clock Eastern.